Yo, what's good, YouTube? It's your boy checking in. Give y'all a little wisdom as the market closes today going into tomorrow. I'm gonna share my screen real quick with y'all and show y'all something on NVDA, which I believe that nobody should be going too high on their um, strike prices as far as trading NVIDIA. So I already got the levels mapped out as far as the trend goes, but I'm starting to see a lot of people. They are buying out the money calls on NVIDIA because they're so used to the volatility. Right now, if you look at this, here's the top trend line, here's the bottom trend line. Here are my resistance levels in the red, support in the green. Here's some future levels if the market just happens to sell off. But this is what I want to show you guys. Nobody should be buying strike prices above 133 at the moment if you're in call, especially if they're weekly. If you're gonna buy anything 140, 150, anything like that, they need to be 30, 60, even 90 days out. Nobody should be in a weekly call right now. Their strike price isn't anywhere between 130 and 133. And 133 is kind of pushing it. As you see, the resistance is at 133.05. 130 right now max will be my out the money strike price if I'm playing NVIDIA calls. Another reason why you need to be careful on NVIDIA calls right now. This day right here, Thursday, a complete bullet, bearish engulfing candle from the day prior to. Even if we go look at Friday when the spot actually took off, the market had a nice little reversal. NVIDIA didn't make up the ground that it sold off on the day of. So at the moment, we're still trading inside of that bearish candle. And today, we're trading inside of this bearish candle. So as NVIDIA goes sideways and is trading against downwards pressure, right now, if you're in weeklies, your call premiums are going to get burned. Even if you're in puts, they're going to get burned too. But if you're in calls and they're out the money above 133, you're going to face a lot of theta decay, a lot of sideways movement, a lot of jump price spikes up and then flushing back down. If I see us break this 127 level, we're going down to 125, 124. Like I already see it happening just because the rejection level it's not holding very well. As you see, it's briefly breaking above the 130, 50 price range. But as you see, it's rejecting and coming back down. All we need to do is see this break right here. This break below that 127 mark, and we're going to see a movement down here to 125, 124. Now, I'm not going to say that this is already written in stone. This is just based off of what I'm seeing. I'm seeing a lot of rejection areas. I'm not seeing any higher highs being made. Low key, this is what I see. It's kind of ugly, but I'm seeing a lot of rejection around this 130.55 level. And the price could come down a little bit more this week. We'll just have to keep our eyes on the cues in the spot. And even if you're not watching those, you should be watching SMH. This is semiconductor holdings. Look at it on the daily. Same day, Thursday. Big bearish candle, big bearish engulfing candle, and then we have ranges trading within this 282 to 270 level. So right now it's not doing any work to break above these levels. So right now your calls should be 30 to 60 days out, at least 2 weeks minimum. until it can break above this 282 level and build some more bullish momentum going through the year. But as of right now, you want to be cautious on calls if you're playing semiconductors. Even Dell had a brutal sell-off today, um, opening around the 141 range, and now it's closing around 137. You see SMCI, it actually touched briefly the 960 range that I had set, and dropped all the way back down to 882, almost $100 drop in a day. Semiconductors are getting punished right now. AVGO just went through the stock split, so it's opened up at 173, $174 today. Long term, I haven't charted it out, but as you can see, it's more red days than green days over the past week or so. So semiconductors is just something that you want to be careful of. You shouldn't be going too far out the money with your strike prices. It should be 130 or below in the money calls if you're gonna do that. But just watch. Just watch. We need to take this candle out right here in order for us to have a break above this level and push back to try to retest that 139, 140 price range. Um, that's all I got for you right now. We did play coin in the Patreon, which paid nicely. Some people went 50%. I played a 260 call, and I have some longer dated calls right now, but I played a 260 call today at open. Um, I caught it at open right here for the break above 231, 232. Played it all the way up to 244. I took profit up here, went for 160%. I think I put in $100 on a weekly. I end up closing at 170. So it don't always take a lot of money to make some money, but you have to have a plan to enter, and you have to have a plan to exit in order to keep those profits going. Airplane flying by, so I'm kind of muffled. That's why. But I think coin can run all the way up to about the mid 255 level. Mid 255s, but I didn't want to hold that long since I was holding an out the money call. If I'd have went closer and went like a 245, which that's what I signaled in the Patreon with 245, I would have held longer. Mara, which was another stock that mirrored BTC. We watched for the break above this $23 range. Once we seen that it started moving, I signaled $25 calls. I didn't want to go too far out the money, but I do have levels marked up. 25.80 is our current price target. I'm not saying hold it until it hits that level, but I had one of the members, he bought calls Friday going into close. He closed profit on about 75% of them, and he's swinging the other 25%. That's how you lock in and secure profit. Smart way of playing. That's what we do. We buy smart contracts, lock in profit, let the old money work for us, and recycle the profit money that we had. So, it's your boy Royalty Trades. I'll lock the Twitter link, and the Patreon link in the comments. Come tap in, have fun, make money with a family. We'll see you guys tomorrow. I'm out.